The rally in stocks continues, at least for the time being. Bonds are not going up yet, but they seem to have stopped falling. So I'll take that as a positive for now. Commodities remain stable above their support levels, while the US dollar is pulling back after a long and strong move higher. Hello sector watchers, welcome to the show. This is the 150th episode of Sector Spotlight for Tuesday the 1st of November, and I'm recording it on Monday the 31st of October, after the close of the US markets, which means that the monthly charts for October have just been completed. My name is Julius Kempenaer and I am presenting to you from Amsterdam in the Netherlands. As the 1st of November also happens to be the first Tuesday of the month, the timing is perfect to look at longer term trends in asset classes and sectors using monthly relative rotation graphs and monthly price charts. Ladies and gentlemen, this is Sector Spotlight. As we now have the monthly time frame also available on the RRGs, as you can see here, we only used to have dailies and weeklies, but with the latest update of the platform we got intraday data, but we also have monthly data. So with this episode of Sector Spotlight being all about monthly charts, I want to bring up the monthly RRGs. Starting with asset classes. Now be careful, this is showing really long-term trends. However, they can give us a very good background of what's happening in the longer-term time frame, which you may sometimes forget when you're in the middle of trading or in the middle of some analysis. It may be a good idea to step back and look at that really long-term trend, those really long-term developments that are that are underway. And what we see here on this RRG is actually a fairly clear picture. If we go over the asset classes that we have on the plot, we've got commodities way up inside the leading quadrant, but losing relative momentum, which is what we've seen in this asset class over the last months. They had a massive run up and they're now rolling back over. They're coming down. We'll look at a few individual charts in a minute, but it sort of reflects what you have in your mind as a long-term picture for commodities. The other one, obviously very clearly, is Bitcoin. Underperforming, strong relative downtrend versus VBINX, which is our 60/40 balanced index fund that we use as a benchmark here. With regard to that benchmark, Bitcoin is a underperformer. There are simply other asset classes that are showing better performance in a longer term trend than Bitcoin at the moment. One of them being the US dollar. And you see that the US dollar index is moving into the leading quadrant, and that's reflecting that longer term strength that we've seen in the US dollar index and in euro dollar and basically the dollar against most other currencies in the world. We talked about that very often here in Sector Spotlight and we'll continue to do that. What you also see is the strength for fixed income asset classes. So here is the cluster of government bonds, corporate bonds and high yield. And on the opposite side we see stocks represented by SPY moving into the weakening quadrant already for a couple of months. Mind you, these observations are now months. They're not weeks, they're months. So it is a long-term trend and you can see that move rolling over. And when I started prepping for this show, I was trying to see where did that happen, and you can actually see that SPY, of course, I was looking at SPY. You can see that inside the leading quadrant it's leveling off, and then here you can see what happened with VBINX, with the benchmark, and when it started to roll over, that's pretty much driven by the stock market going down. You can see that SPY started to roll over and move to lower prices. So my take on the monthlies is that you need to be a little bit more aggressive. You need to, because they are such long-term trends, if you really wait until something is very, very clear, then you're probably very, very late in the move. The US dollar index is a very good example. It's just crossed into the leading quadrant, but we've seen that this has been a very strong market for a very long time already. So this is the long-term picture for asset classes based on a relative rotation graph. We're going to look at some of the individual charts now. When we look at the monthly charts here on Sector Spotlight, we usually do that based on price performance, not so much on relative performance. So the RRG that we're looking at here is purely relative, as RRG was meant to be. But now that we have the monthly trends available and we're looking at monthly trends, it makes so much sense to change that benchmark VBINX into $1, and then we'll look at the price trends in those asset classes. And then you'll see a completely different picture. You will still see commodities on the right hand side, but much stronger rolling over. But you'll see the others, stocks, bonds and Bitcoin, they're all moving or already inside the lagging quadrant or moving towards it, which underscores, which displays the current weakness pretty much across all asset classes. If we start with the S&P 500, then we can see that that downtrend is still intact. Yes, we are bouncing. Yes, we are rallying. However, if you look at this long-term chart, you probably, hopefully agree with me that this is still a downtrend. That rhythm of lower highs and lower lows is very much in play. So we can still move higher towards, I don't know, maybe 4,300 even, without really going into a new uptrend. So I've written an article about that recently. I think this rally here is very important because it will show us especially where the level where the next peak, the next high will be formed, will give us a very important clue about the future movement of the S&P 500. This can be a couple of months out. This is not really near-term analysis, but we have high, high, high. So these are 3 lower highs, and we've got 1, 2, and now recently 3 lower lows. So where that next high will come, if that is below the previous one, which was around 4,300, then sellers are still in charge because they don't want to wait until it gets back to that 4,300 level. If we get back to 4,300 or even above it, that obviously is going to change that picture. But as you can see here, there is quite some room for movement inside the S&P 500 without breaking that long-term downtrend, which is still intact at the moment. If you look at government bonds, that history is not that long. GOVT was only introduced back in 2012. IEF, which is this 7 to 10 year bond, has a little bit more history, and here you can see that that 100 level is very important. 98, 100, that was broken, and we bounced, we found support around 92, slightly above 92, and we're now bouncing back up. But as you can see, there is plenty of overhead resistance for IEF to find new resistance. So that area between 98 and 100 is expected to come back as resistance, which will, if it starts to move down, push yields higher again. So that's another thing that we need to be watching and need to be aware of, that it is looming over the markets at the moment. If you look at corporate bonds here, then we can see that also the LQD ETF broke out of a very important trading range. 110, 111 was the level. That will now start to act as resistance on the way up. So the ease of movement, the preferred move for LQD still to the downside, unless this rhythm of lower highs and lower lows will start to turn around and move in the other direction. But if you look at this chart, I hope you agree with me that that's not going to happen anytime soon. At least I don't think so. Pretty much the same goes for high yield. You saw a break of very important support, which is now going to act as resistance, which will cap the upside for high yield bonds. And then here we have DJP. rallied into resistance, and we're now, for a couple of months already, we're now hitting that rising support line. So this is now getting more and more important. I would love to see support coming in here and DJB to start move higher and start a new up leg in its current uptrend. And pretty much the same goes for GSG, which also rallied into resistance. Has a little bit more room to drop, but I think that area around 20 could be the new higher low that's being put into place, after which we can see a new rally in commodities emerge. For that to establish, we need to take a closer look at the daily and the weekly charts in coming weeks. And then we have US dollar. That strength is very, very visible, but you can also see that it is now getting, it's almost a vertical move. So that's very nice. It underscores the current strength of the US dollar, but it also opens up the possibility for quite a big drop, quite a big of a corrective move. And you can see that we could drop to around 104 without negating that upward break. So the US dollar very likely remains very, very strong, but there is definitely a possibility for a temporary setback. Bitcoin seems to be going the other way. That is resting at support, and it's now already there for 5 months. And you know that the longer a level remains intact, the stronger it becomes. And I know that the shorter term picture for Bitcoin is improving. So I wouldn't be surprised if we would see Bitcoin moving away from that 18K level, potentially towards 25, maybe even 27.30, but that needs a shorter term analysis. Nevertheless, the support for Bitcoin around 18,000 remains very much intact. Let's move on to the sectors, and here also the monthly RRG for the 11 sectors. What we see here is energy being the outlier. That tail is way inside the leading quadrant, still moving higher on the JDK-RS ratio scale, which means that it's still picking up relative strength, while at a stable relative momentum level, which means that it is a very stable trend. I'm going to take that off here to make the other tails better readable. And what we see here, that's very interesting. It keeps coming back every time that those defensive sectors, healthcare, staples, utilities, are inside the leading quadrant and still moving further to the right. The current rally seems to be driven by those 3 defensive sectors, the long-term rally. I'm not talking about that bounce that we're currently seeing, but the move. During the move lower, you see these sectors leading on a relative basis. Doesn't necessarily mean that they're going up in price. As a matter of fact, we can see that in the table below, because you can see that utilities and staples, they lost 4.9 and 5% over the last 6 months, but SPY lost 5.5%. By the way, while we're talking about that table, you can see that energy picked up 22.4%, where real estate lost almost 20%. So the difference, the difference between the top and the bottom is massive. That's over 40%. So if you 6 months ago you bought XLE and you sold XLRE, you would have made a 40% profit. That's unheard of. That's a really big difference in terms of relative strength. Doesn't happen all the time, but now it did. On the lagging side, we've got communication services, which is a sector that we've been speaking about long term already. In sector spotlight, still being very, very weak, and that's confirmed by that weak tail on the monthly RRG, which is still pushing lower. We've got consumer discretionary, XLY, which is deep inside the lagging quadrant and still moving lower on both scales. And just recently, technology, XLK, moved into the lagging quadrant. We've already seen that weakness for a couple of months in XLK. It's now being confirmed with that tail, with that monthly tail moving into the lagging quadrant. As I said, these trends, these are very long-term trends. They take a long time. It takes a long time for them to turn around on the RRG. So I'm actually more inclined to start watching the early turns in those sectors while still inside lagging, maybe inside improving. When you see the first signs of those tails to start picking up, that's probably a very good indication that something's changing under the hood, which points us to the shorter term RRGs and the shorter term charts to pick up potential trades. The other sectors, industrials, materials, real estate's very close to the benchmark, meaning that they're more in line with the S&P 500. And XLF is actually just starting to pick up, made a little bit of a strange hook here. It's relatively stable inside the leading quadrant. Here also we can do that change to $1 to see what's going on in absolute terms, and you will see a very different picture here with all the sectors not necessarily already in a downtrend, but very close to it, with the only exception, energy, being inside the leading quadrant and moving higher. Now go to the individual charts. We'll just go over all of them. Here is communication services. Drop back into that range, and as you can see, that move is going further down. That lower highs, lower lows rhythm is still there. This could go all the way down to 135 without a problem. It can bounce towards 180, but as you can see, overhead resistance is definitely there. Here is consumer discretionary. We saw that moving into the lagging quadrant, but if you look at the price chart, we found support around 1,050 last month, in the month of October, and we're bouncing up. So 1124, that's probably somewhere here, is the closing price, which means that there is plenty of room to the upside without turning around the current downtrend that is in place. But also 1,050 seems to be a very solid support level, so I'm watching that. If that breaks, then we're in big trouble. If we hold that, then consumer discretionary could be underway for building some sort of a bottom here. It's very early, but that 1,050 area seems to be a good level to watch. Here is consumer staples. As you can see, downtrend is intact. Here, the area around 700 held up pretty good. We're currently we closed the month at the top of the bar, just above 750. The downtrend's still there, but as you can see, that area around 700 held up very good, which makes consumer staples still very good as a safe haven and a defensive sector. Now here is energy, the strongest sector over the last month and this year actually. And as you can see, it's pushing against that previous high around 700. The next level is the all-time high, which is around 730, 735. If we can take out that hurdle around 700, then the next stop is 735. And if we go above that, we're in uncharted territory with the energy sector. And then, it can go everywhere. It can go much, much higher. Downside is pretty big because of the recent rise, but it's well protected. I would say that previous high here around 650 you could watch as a first level, and then obviously 500 is the most important level to watch. If we go to financials, we can see that again last month we had a very short dip below 500, but that area held up very good as a support area. And the sector rallied and closed towards the top of the range. We're looking for resistance around 580. Until then, it remains in a range and it remains in a downtrend, lower highs, lower lows. Here is healthcare, one of the defensive sectors, and as you can see, that support area that was created by an intermediate high here, the most important monthly low here, that was, let me tell you which one that was exactly, that was in June of this year. And now we're touching that rising resistance line that is running over these highs. Maybe that needs to be lifted slightly. So right here, it's a pretty arbitrary. You can see finding those, especially the diagonal lines are pretty subjective. I try to find as much touch points as I can, but still then there is quite a room for quite some margin there. But I think that it shows pretty clearly that that area around 1400 is now is now acting as support. Again, this sector also closed in the top of the range. If we can take out that 1570 as that previous high, we could move for a challenge towards 1650. Again, this is a defensive sector, the healthcare sector. And then we have industrials, another sector resting at support, came to support around 700 and bounced off that back up towards the top of the bar towards the end of the month, closing around 800. But as you can see, like many of the other sectors, lower highs, lower lows on the monthly chart means that the downtrend on this monthly time frame is still there, and you just simply need a lot of buying power and for this to turn around. It's not going to happen overnight. It's not going to that these downtrends in these sectors are not going to magically disappear in the next 2 weeks. So here is technology. We know that picture, that downtrend is in play. We had 2000, just below that is an area of support. Let me highlight that for you. So that's about 1930, 1950, that area. But that downtrend, lower highs, lower lows is in place. As you can see, if we go straight up, we can go to 2500, 2600. Still, that downtrend on monthly bars will still be there. Here is materials, another sector, came to rest around support 420. We're now bouncing upward. Where can we go? I think that previous support, now resistance level around just below 500 could be a good target. But here also the downtrend remains in play. Real estate, probably one of the weaker sectors, lower highs, lower lows, found support around 210. That area between 200 and 210 is in play for a long time already, but the overhead resistance is looming around 240. So the upside is very, very limited as long as this downtrend is intact. And then we have utilities. It was the only sector which was still in an uptrend, but last month we dipped below that cluster of lows, so it's not an uptrend anymore. It's not a downtrend either, because we just had a lower low, but we still have a higher high. So that is now caught in a range between, a very wide range between 320 and 390. That longer term trend here is sort of challenged now, but it remains one of the defensive sectors, and we could go, we're now around 340, we could go all the way up to 390 and still be looking okay. And then how does that work out on the S&P 500? Here also that lower highs, lower lows rhythm is very much clearly intact. You can see that it is touching on that diagonal support that I've penciled in here, but more importantly probably the 3400 level. And if we go watch on the upside, we could see a rally towards 4300. We already mentioned that in asset classes without breaking this downtrend. And as you are used in this episode of Sector Spotlight, which we run on the first Tuesday of the month when we look at the monthly charts, we'll do the summary, the overview of all these sectors and the levels that we've been talking about on this table. As you can see, the month-to-month results are very, very strong. Only one sector, communication services, let's say it's unchanged, give it the benefit of the doubt. But energy stands out, almost 25%, financials almost 12%, and industrials 14%, all three in double digits. And across the board, a very strong month, S&P up almost 8%. If we look at the constellation of the market, obviously there's no new all-time highs, no new closing highs. There's only one sector left in an uptrend, that's energy. And 82% of the market capitalization is in a downtrend. So healthcare and utilities are in a sideways move. They don't fit the narrative, they don't fit the definition of either an uptrend or a downtrend. As a result, of the recent bounce of support in many of these sectors. You can see now that the downside risk has increased because the market rallied. Support levels remain where they are, so the downside risk is now increasing, and we are nearing resistance levels, so that upside potential is decreasing. That's the way you should read this table. Gives you a nice overview of what you can expect, what to watch from a longer term perspective. And that concludes the 150th episode of Sector Spotlight. We're heading for 200 at least. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show live on StockCharts television or catch the recording on YouTube or any of the on-demand channels. I'm looking forward to seeing you again next week for a new episode of Sector Spotlight. Same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.